What's going on, everybody? This is the blockchain backer bringing you the latest cryptocurrency news and analysis. Today, we're going to be talking about the Bitcoin price chart. We're going to be talking about the macroeconomic world and the Federal Reserve, and talk a lot about the narratives that are out there in regards to Federal Reserve interest rate hikes and the narrative that is spun by the fake it till you make it experts over there on Twitter telling us not to fight the Fed. Wait until they start cutting interest rates. And while I've heard it all for the last year, and truth be told, the price of Bitcoin is higher here at August pricing, August of 2022, which is really also the same pricing from back in June, as the Fed has been hiking all these months. Well, even as the hiking has happened, we haven't seen any drastic change in the cryptocurrency market since then. But a lot of the narrative that is spun out there on Twitter, on YouTube, is really eaten up by a lot of people. And I know this because I get a lot of comments on my YouTube videos. I get a lot of comments on my Twitter. You got everybody who's a Fed expert, which just means they're all listening to the same people and regurgitating the same thing that they hear, that don't touch this market until the Fed starts cutting rates. I've argued against that this whole time because the same people also believed that we were going to be having the great financial crisis by overlaying these fractals and saying we're doing the same thing, which obviously over the course of the last 4 months, things have deviated. This is not your great financial crisis fractal any longer. I haven't seen anybody talking about this at all. It seems to be a lot of confusion out there now that we're not doing what people thought we were going to do in regards to a recession. My argument has been we are not going into a great financial crisis recession. And my argument has also been that I'm not going to be able to interpret whatever the Fed is saying and say that this is going to be the determining factor of this, then that, whatever. But even during the whole hiking cycle, we've seen the market retrace back up here for the Dow Jones. And I wanted to show something for crypto because a lot of people still buy into this, that we're waiting for the Fed to cut rates and to stop this hiking cycle in order for the market to get bullish, especially once they start cutting rates. And I think this is one of the most important charts we can look at if anybody wants to interpret what the Federal Reserve is doing and how it impacts equity markets and the cryptocurrency market right here. What we can see in yellow is the federal funds rate. So this is what they're altering when they say we're going to do a 0.25% interest rate hike. It's to the federal funds rate. We can see dating back here to 2000, we can see when we're having these rate hikes in effect. We even see them taking place back in here in 1994 and 1995. And of course, our most recent one, our most dramatic one that we've seen here has been going on here in 2022 and into 2023. But there's something very interesting to take notice of, and it's the behavior of the equity markets of once the Fed actually pauses and then once the Fed actually starts to cut the federal funds rate. And that while for the last year, I've been hearing nonstop in the comments section of my videos, which means everybody's getting their information from the same place, that once we get the Fed to start cutting rates, that's when to get bullish on this market. And don't fight the Fed. But we're going to look back at these rate hike cycles and these cutting cycles and see if there's actually any validity to that argument. And of course, we're going to include Bitcoin in there. We're going to take a look at that. Even though we only have data going back to 2011 here on my chart, we know there's a very serious correlation between Bitcoin and the Dow Jones Industrial Average. So at least we can kind of step back a little bit and look at these rate hike cycles and see how the market behaved during those times. And what we can clearly see here is we go into a rate hike cycle here in 1993, 1994, 1995. And look what happens with the market during that time. We actually see the stock market rise during a Fed hiking cycle. Same thing goes over here. We're actually seeing a hiking cycle take place here. As we are hiking, stock market slightly up. We're going to come back and revisit these things. We can see in this hiking cycle, stock market slightly up. And we can see during this hiking cycle, stock market up. And we can see during this hiking cycle, volatility all over the place, almost back to where we started at with the hiking cycle. But if anybody is going to actually take this and say, I'm going to make all of my decisions based on when the Fed is hiking, when the Fed has paused, and when the Fed has cut, well, the thing I've heard for the last year is don't fight the Fed when they're raising the interest rates. You only want to buy it when they start cutting, right? That data does not say that. The data actually says otherwise. Because what we can see right here, I've included this green line to show when the Fed stopped raising interest rates, and then I included the red line to show when they began cutting. And so there was always kind of this pause period where they weren't raising rates there and then decided to start cutting. And you can see it's usually not very long. It's usually between 6 to 12 months after they've paused that they go ahead and they start cutting. At least over the course of the last 20 plus years, that's what it's been in the 3 different hiking cycles, cutting cycles, pausing cycles. The 3 that we've seen, they pause for about 6 to 12 months before they actually end up starting to cut. And what we actually see happening in here is during these rate hike cycles, you actually see equities are rising into these hiking cycles right in here. And that while they are slight in some, more dramatic in our most recent one. But in each of these hiking cycles, the stock market was actually rising during the hiking cycle. Then, as we go into pausing, you actually see that the market continues to rise. As we go into the pause, the market continues to rise. As we go into the pause back in 2000, we sort of flatline. But notice it is once that cut happens, it is once we actually start reducing interest rates and cutting the federal funds rate, it is usually within 2 years after that we actually see things really start to hit the fan. And that it's really not something that is like massively bullish for the market, but it's signaling underlying problems are coming ahead. Now, that's kind of the opposite of what I've been seeing in all of the comments of all my videos for the last years. Don't fight the Fed. Don't fight the Fed. As they're raising interest rates, don't fight the Fed. We want to see them cut. People are cheering for them to cut. It's very clear here on these charts that the cut is actually the warning sign. The cut is saying, wow, things are about to get awful. For the last 23 years, that's what it has signaled. The hiking cycle, we've actually seen equity prices rising into the hiking cycle and rising or pausing into the halting or pausing of rate cycle. And then once the cut comes, that's when things hit the fan. So that's just the opposite of what I've been hearing and the opposite of what I see on Twitter, YouTube, and the opposite of what, of course, I get in all of my videos that I have for the last couple of years is how could you do anything while they're hiking right there? Well, go through history and take a look at it. You could see it for yourself that typically equity prices are rising into the hiking cycle. They're flatlining or they're continuing to rise into the pause period. And then it's once the cut actually comes, which is what everybody's been telling me, is that we don't fight the Fed. We wait for them to start cutting. And then when they cut, we buy. That's the polar opposite, right? That actually tells you things are going to actually hit the fan pretty bad once they actually start cutting. So right now I hear a lot of people worried out there, oh, the Fed's going to keep raising interest rates. It's going to be really brutal. Maybe so, but go look through the data yourself and you can clearly see that the raising of the rates is not necessarily the big problem for the markets. It's once they go through the pause period, then we go into the cut. The second the cut starts to happen, and really over here in 2019 and 2020, we saw prices still have a short squeeze here before you go back into what? Your double tap, bull flag, breakout, back test, V bottom. But still, that's what was on the horizon, right? A monster crash coming in here at very similar to the depths of the great financial crisis. And so one of the reasons I point to this is because I know it, that most people look for reasons and understandings. They want to have like this understanding of the world and see if they can dissect all the narratives of the world and figure things out. Whereas on my channel, really, I'm just like looking at charts and I'm trying to find structures and I'm looking at indicators and all that stuff to say, hey, this is what the world is going to do next because this chart says it. And people would rather think to themselves, no, man, I want to figure it out based on fundamental puzzle solving, right? Of all the events that are going on in the world. And I'm going to forecast the world by having this really amazing understanding of what's going on around me and not making it as simple as just looking charts. But, for the last year, I've been hearing constantly, don't fight the Fed. If the Fed is raising interest rates, that's Doomtown. And it's not until the Fed starts cutting rates that it's time to start getting excited. But I wanted to show you kind of the cycle history of each of these throughout time is that we typically see the hiking cycle. The stocks do okay during that time. The pausing cycle, stocks do okay during pausing. But the cut, the thing that everybody's actually looking for, the cut is actually the signal that things are about to get really, really ugly. And so I've been kind of clear that, hey, look, I'm not going to be able to forecast what the Fed does or what their narrative is going to be and what that actually is going to end up meaning for markets. And I've been pretty much told that I should understand that because I have to wait for the hiking cycle and don't fight the Fed. And I wanted to show the data to say that narrative that everybody's been telling me for the longest time is actually wrong. That's a misinterpretation of what has happened during hiking cycles and during cutting cycles. Cutting cycles, the second the Fed comes out and says, we're cutting by 50 basis points, how many people out there are going to be interpreting that as, yay, we're bullish again. Now we don't have to fight the Fed. The Fed's going to make money printing like crazy. It's going to be good times. How many people are going to interpret it like that and not interpret it as that is the forecast, that is the warning sign? Things are about to get very, very ugly in here, because that is what it has meant every time. Now, once rates got to zero, right? Once they were already done cutting and they'd cut it all the way down to zero, was that a good time? For sure. That was great. But the start of the cutting cycle and during the actual cut all the way down, it was actually really, really, really bad for markets during those times. So I just wanted to show that, because I think there's a lot of people out there with a perception of this completely differently when they're trying to build their fundamental view. And I think it would shock people to see that markets actually have moved up during hiking cycles. They move up during the pause period. It's actually the cut. That's the bad thing. That's the thing that actually has signaled Doomtown coming. But we said we'd take a look at Bitcoin in here, right? Let's see if we can see anything actually happening in here. Even notice this. This is the hiking cycle from back in 2015. They are hiking. The stock market is rising. Bitcoin's rising with it. But we pause out right when the stock market does. Fed pauses right here. Bitcoin surges. Look at this. The Fed cuts right when the Fed cuts. Right there. That is where Bitcoin's retracement ends. The actual cut was bad for Bitcoin. And look at the whole way down on the cut. So as it's cutting, what is Bitcoin doing the whole time until the cut is done? And that's really the only hiking cycle we have to look at. The hiking cycle and the cutting cycle that we have to look at for Bitcoin. Now, people could look at this one and say, oh, but see, when they started hiking, when Bitcoin was right here at $38,000, see, it led to destruction. But we already knew we were in a bear market by here. We already knew we had hit a 4.236 extension on Bitcoin. We already knew we were going to be taking these lows out right here. Sure, we were looking for a bigger retrace. Didn't change anything that Bitcoin was already in Doomtown, in Goblin mode, before they even started hiking. We were already done. So what will be interesting right here is to see what happens during a Fed pause period. But to remember that there's no historical precedent set by the last 23 years to indicate cutting is good. So we actually aren't looking for cutting. Pausing is, based on history, pausing is okay. And we only have one example of a hiking cycle and a cutting cycle and a pausing cycle for Bitcoin. And the pause period was there in 2019. And that was a time period that happened to be good for Bitcoin. So I thought this would be cool to look at, to maybe reshape some of the opinions people may have in regards to Federal Reserve interest rate hikes, in regards to them pausing and in regards to them cutting. Because I'm seeing stuff out there right now that it's not expected that we're going to be having rate cuts in 2023. And I know there's a ton of people out there who are thinking to themselves, oh no, that's bad. We're not going to be having the rate cuts. In my mind, which is the opposite, I say, well, okay, that's okay. Because rate cuts after a hiking cycle have signaled bad times are ahead. It's the pausing period that's still okay, but it's the cutting period that is bad. And while this would be interpreted as bad, and as I read this right here, somebody says they're never on the table. And then he says, well, the market thought they were. Did the market though? Did the market think they were on the table? Because if the market did think they were on the table, wouldn't the market have been like, hey, this is bad? Or is the market just naive and dumb and doesn't remember history? Rate cuts are bad. So hiking cycles have been okay. It is pausing cycles where you start to say, all right, now all eyes on that cutting cycle, because the second those cuts start happening, that's where the warning signs start happening. And we could look in here what happens when the cuts happen. You can actually see it's still waddled sideways for a year. It's still waddled sideways for 6 months. And in here, it bounced around. But it was a forecast of what was to come in each circumstance. We continued rising into rate hikes. We continued rising into pauses. And then after cuts came, that was the sign that doom was around the corner. So anybody cheering for the rate cuts, well, we still haven't made it to the pause period. And the pause period tends to last 6 to 12 months. That still tends to be okay for markets. But then it's the cut, game over, walk away. And it really is funny to see that data when we just zoom in on the last hiking, pause, and cut cycle of the federal funds rate, that during the hike, that's the whole 2016, 2017 bull run. The whole insane bull run is when the federal funds rate is being hiked. And then the retracement happens in here during the pause period. And then the second the cut happens in here, look at that. Right when the cut happens, that was the end of the retracement. So if you want to cheer for pause period, I can understand that. I can understand cheering for pause just because of the one time we've had a rate hike, pause, and cut cycle with Bitcoin. But we definitely see in here the second that the cutting began, it was time to walk away, right? And so then they paused again right here, right? After doing all this cutting, they go ahead and pause for a couple of months. And we could see, oh, okay. And then what happens? They start cutting again, right? C19 is happening. Everything is getting out of control. It's going wacky. But they begin cutting and boom, off and away the market goes, right? So cutting and off and away it goes. So I think this kind of helps if you want to like wrap your head around it. You don't have to, this isn't like what I like about looking at data and presenting it like this is like, it's not being like, hey, here's somebody's opinion on it. Here's what somebody who knows what they're talking about has to say about it. I'm not sitting here saying, I know what I'm talking about. This is what's going to happen. All I'm doing is literally showing you the data of what happened with hiking cycles, pausing periods, and cutting cycles. And so you can go through these and you can just see them for yourself in here, right? Hiking cycles, not necessarily terrible for the equity markets, right? Pausing cycles, not necessarily terrible for the market. But the second we start cutting, that was when things got awful. And so this isn't like opinionated. This is nothing. This is just showing the data. Markets going up during hiking cycles, going up during pausing cycles. And then the second the cut happens, watch out, game over. So if we don't have rate cuts on the table, well, I would say that's at least a good thing. But also, I want to make it clear, I'm not taking a shot at Dylan LeClaire in any way either. I actually enjoy following him. He puts out a lot of good data. We've never talked to each other. He probably doesn't even know I exist. He doesn't follow me. I got nothing against him. I enjoy following him and the data that he puts out there. So this actually just triggered in my mind of thinking, oh yeah, I've been wanting to talk about this because we talked about this a couple of weeks ago in a live stream, but I really wanted to like put something together to show. Good. Rate cuts not happening? Good. Let's get to the pause, but let's definitely not get to the cut. So I hope that you found that informative. We don't spend a lot of time dissecting the Fed because I've made it very clear. I'm not going to be able to tell you what the Fed's going to do, what that's going to mean for markets. The only thing we can do is look at the data of what it has meant when they've been hiking, when they've paused, and when they've cut. Everybody has screamed, don't fight the Fed while they're raising interest rates. You could see what equity markets have done throughout history. You could see what equity markets and crypto have done during the pause. And then you can see at the same time what the markets have done during the cut. And you can see that the first 75 basis point rate hike by the Fed was there in June. And the altcoin market has bottomed ever since there. And we've done 75 basis points, 75 basis points, 75 basis points, 75 basis points, 50 basis points, 25 basis points, 25 basis points. The market has still bottomed ever since the hiking cycle of 75 basis points has been happening. So might change the narrative that is out there a little bit. All right, guys, that's going to be it for this one. I hope that you're doing well. Happy Wednesday. I want to thank you so much for watching. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you can be notified of when I create new content and when I go live. As always, this is not investment advice and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.